Hi everybody, this is Eddie. Going to update for next week. So we had a horrible week on ending on Friday. So we were up all week, and then on Friday it just came crashing down, and it turned the week into a green to red week, and that's never a good ending story, right? So it looked like we did test the weekly 8 EMA, got rejected, and we're right around the 200. So once the 200 gets broken, we have this low in right here that needs to be taken out. So once we take out this low right here, that's around 358.4, right? So once that's been taken out, it's going to come straight down. Most likely the area that I'm looking at is 3,400. If that gets taken out, we're looking at 32, and then 3,000, and then 2874. Right, so it could be quite a bit of a down move from this area right here. So you want to be very careful. You're holding on to any stocks. You want to have them fully hedged at this point. And then if you're looking to trade, you want to be very careful on trading as well. Holding anything overnight is at risk. This is why I don't swing trade in bear markets, because I let you sleep at night. I don't need to think about my trades overnight when in a bear market. Even when you're short in a bear market, you're due for short squeezes. So your gains could get wiped out really quickly overnight in a short squeeze, right? So just take a look at the size of these candles, right? Big ups, big downs, right? So if you were shorting right here, thinking we're going to go lower, and then you get caught in this, you pretty well gave back most of your gains, right? So you have to be very careful on trading on either direction. This is why I am only day trading, and I am 100% cash. I do have some Leo, but I am mostly just cash, right? Um, so let's take a look at the daily. So on the daily, it was rejecting the 2-1-day moving average. So it got rejected twice. So I was in the Discord group. I was telling the members in Discord that we got rejected twice in this area. You should be very careful. Yesterday, so it did happen. We rejected, and then we came down. And this morning, after Friday morning after job numbers, we just kind of gapped down and just kept going from there. Right. And so I didn't expect we get such a big reaction to jobs numbers like that. But like I said, in these type of markets, anything can happen, right? So the last time we gapped down after hitting resistance, this is what happened. Straight down, right? So you want to be very careful trying to counter trend in this thing, right? Once we get taken out this low, it's a goner, right? So you want to only go short and look for short opportunities and not long opportunities at all, right? Unless you're day trading. Day trading, you can go either direction as long as you're in and out at the right time, right? So risk management in these type of environments is the key to survive it, right? So you can trade either direction, just that you have to keep very tight risk management so that if it goes against you, you want to be out. You do not want to fight the trend in this environment. All right. If we go into the smaller time frame, so on Friday we did have a little dead cat bounce at the end of the day, created this little hammer. So for next week, we potentially could see a little short squeeze bounce, relief bounce, and then go down lower. So there were a lot of put buying on Friday that expire. So market makers tend to unhedge after a large hedge position, right? Because there's so many people buying puts, the market makers actually have to short the index to actually hedge their put position, right? But since the puts expire on Friday, they can now unhedge your position. So they start doing that on Friday, just before it close. That's how we get that dead cat bounce. So they could still unwind some more. If they do, that means they're buying the index and pushing the stock up. So, and if they do that, right, we could potentially get like a little bounce up. So it's going to look something like this, a little bounce up, retest maybe this 8-day and 21-day, right? Retest, and then we go to the next leg down, right? And then it's going to come down, and then it's going to do some waves, potentially go back up, retest, and then go down lower, right? So that's the scenario that we're looking at right now, is this type of scenario. So you want to be very careful on going long, thinking that we'll go higher. It won't be, I wouldn't go long until we take out the high of this area. Right? If we take out 3,800, then we can go to 39 and then 4,000. If we don't take out 3,800, it's just going to keep going lower. So, don't try to have a bias in the markets. Just go with the price action, right? Follow the trend, follow the money. All right. So let's take a look at the Qs. So the Qs, very similar chart to the SPY, except for the Qs are pretty close to that low right there. So with the Q sim scenario, if we break this low right here, it's coming down. It's coming down to around 240 and then potential 220 if that gets broken. So it's still a pretty long way down. You measure that, all right? To there, that's 11%. 220 is another 18%. That's a really long way down. And a lot of tech names are breaking down. Even Apple is breaking down, right? So you want to be very careful holding onto anything. You want them to be fully hedged if you're holding onto them. Otherwise, once the thing get taken out, you could lose a lot of money holding these stocks without being hedged. Right. Let's take a look at IWM. So IWM actually still a little bit higher than the previous low. So it's actually performing a little bit better than the SPX and the Qs. But we are at the pre-COVID high area for IWM already. So it's just kind of holding here. And if it does break down, the next level down for IWM is like down at 145, 140. Down at these areas is where I'm looking to buy some stocks. So if they do come down this side here, I will be looking at some themes for a longer term play, especially growth names, because growth names tend to lead out of bear markets. So you want to start making a watch list on things that you want to buy once we find a bottom, because once we make our higher high, higher lows off the bottom, you want to start deploying some of your cash on the way back up, right? So pick your favorite names, pick good quality growth names, like names that actually make money in a good environment, stuff like NVIDIA, AMD, right? Maybe Tesla. Just make a list of all the things that you want to buy out of this bear market. Usually those are the names that lead the market out. Right. Let's take a look at some stocks. Actually, the only sector that is actually performing in this bear market is energy. In other commodity names, uranium's doing pretty well too. So you want to look at, if you are going to go long, you want to maybe look at these names for some sort of a play. So you look at XLE, came down to 68, bounced all the way up to 81.80. I kind of missed that trade. I wasn't really paying attention to energy stocks because I thought energy stocks was going to break since we broke the 20-day moving average. I thought it was going to come down, but it actually made a higher low and just continue higher. So keep an eye out on that. If we break the high right here, most likely it's going to test the all-time highs. Not all-time highs, 52-week high right here at 92-ish. So keep an eye out for that. And if that goes up to the high, you can expect energy stocks to go up as well. And energy stocks, if you're trading options, they're fairly cheap to buy. So it's pretty easy to swing with options if that's the case. All right, let's take a look at the FANG names. Where are you? Right here. All right. So Apple has been doing so well, and then we gave up all of those gains, right? This is the safe haven for tech stocks, and it's just coming down just as fast as it went up. So, if we do get a lower low, which is breaking 137.94, once we break that, we're going to test this area. Once that breaks, it's going to go way down. If you look at the volume shelf right here, you see that the volume is majority of it is up here in this zone right here. So once this zone is broken, which is 112, once 112 is broken, it's coming all the way down to 83.74 around this area. If Apple goes down to this area, you can pretty well back up the truck, right? I don't know if it will or not, but if it does, this is where you're gonna buy down here. Lots of it too. You can probably buy leaps buy wherever you want down here, right? Up here, I'm still not touching it. Over here, maybe around 100, I'll start some positions, but I would be expecting it to come down to like 80-ish area if 100 does not hold. So at 100, what you want to do, you want to deploy some cash, not all of it, maybe a third, and then plan that you're going to buy some more at around 80-ish, right? And then save some cash just in case it goes any lower, or in case this bear market stays for the next year or two. If that happens, you know, you want to save half of your money and then buy on the way up instead of buying on the way down. Right. That's one of the rules I set for myself. If I am going to buy stuff on the way down, I'm only buying them at key supports in major trends, and then only deploying maximum of half my money, right? That way you'll never get caught in a very bad scenario, which happened a lot in bear markets, right? If you ever traded 2008, you'll know exactly what I mean, right? Cheap things can get super cheap in a bear market like that, and you wouldn't believe how cheap some stuff got in 2008, right? Like Bank of America was trading at $1. Right? Those are the type of scenarios that can happen in really bad bear markets, right? I'm not saying that this is one of those scenarios, but you know, you never know. So that's why you always want to set the 50% rule for yourself and don't deploy any more than 50% of your cash in any bear market when you're trying to time a bottom in, right? And then you know, averaging up is always the best way to go. But if you're like a long-term investor and you see these deep discounts and these high quality names, then you can obviously deploy some cash, right? If you catch the bottom on these, they're going to print you a lot of money, right? So you know, so if you want to buy in a bear market, that's the way to do it. Just look at key supports that you think that will bounce for the longer term. Just buy those areas, except for you need to manage your money properly. You need to precision size properly, right? You never go all in thinking it's the bottom. That's always the worst thing you can do, because nobody knows when the bottom is, right? I think that this is the bottom, but then, you know, what happens if that goes down to $50? You lose half your money off the from 84, right? From 100, right? So, and then the ones they bought at 84, you still lose like $30 on that, and then you have to wait a really long time. How long will it take for it to come back, right? In 2000, Microsoft came down from to like, you know, $20, and it stayed there for like a decade, right? Are you willing to stay here for a decade, right? So that's why you never want to deploy 100% of your cash in any bear market whatsoever, right? So that's the way I would plan that trade. All right. AMD. So chip names are down hard. All right, everybody's giving warnings and guidance down. So AMD is no different. So AMD broke the key support right here. It's gone. So I talked about this a week ago or a couple weeks ago, I forgot. Once that level was taken out, this is the next level right here. This is the first buy zone, which is between $60, and then the next buy zone is down here around 40. And then down at $30. If it's not $30, I'm backing up the truck at 30. I think 30 is a good buy. But you know, majority of the people bought around $10. So if AMD comes down to $10, this is where you back up the truck really hard, right? Still deploying only half your money, but I would be loading up around $10, right? I don't know you'll go down $10, but down at these areas, you can start selling puts at 50. Grab some shares. I wouldn't deploy in more than 25% of your initial position with AMD, just because of the guidance down for like the next so many months, whatever. So, you know, I would start selling some right here. You can start wheeling it at 50. That's not too bad of an area to start, but you want to plan buying it at 40, and now even consider buying at 30, right? Because they gave a really bad guidance, so it can go down to these areas pretty quickly, right? So you want to be very careful longing AMD right now. If you mix a dead cat bounce, you're looking at around $70. So if it bounce back up to 70 to retest and then go down lower, it can happen. right? Amazon's not doing too bad. It's actually still holding June loans quite well. It's one of the names that are holding quite well. So this is the pre-market high. That was that June low. So it did fell more than the others at first. That's why it's kind of holding onto this area right now. This is called the value area, right? So it is holding the value area. If it comes down to $100, it's buyable $100. Deploy 1/3 or a quarter of your money. I probably deploy 1/3 on Amazon, right around $100, and then or even sell puts at $100 right now. You could probably do it, and then plan for around 85. So that's yeah, around 85 is where I would go in with a half precision, 80 85, and then you wait for a higher high before you add any more. So that would be the area that I would be looking at for substantial buying is around 80. You could buy some at 100. All right, Meta, yeah, it's still doing nothing. So skipping Meta. Google. So Google, we did broke this consolidation area right here. I do expect we come down lower now because of that. So on Google, this is the area to look at. This is the buy. Right around this zone right here. So this is the first buy zone. Your second buy zone would be like around this area right here. All right. So 88, 72. These are your buy zones. You start selling puts right now at 88 to take some shares. And it's likely that we'll bounce at 88. You'll take a lot of downside pressure to get down to 72. So at 88 is where you want to go in with maybe a third precision. If you are aggressive, you can go in half, but I would just go in a third right here, and then if it comes down to 72, I would go down. I would go in a half. And then with Google, you can hold for long term. So these areas are the buy zones that you want to start getting in at, because longer term is going to be higher. That's all you need to know. Is longer term, Google is going to be higher. There's not much people that can compete with Google. So it's all based on the economy, and bear markets, they tend to last a year to up to 3 years, right? So you always want to be careful how you deploy your money, and that would be one of the reasons, because they do, if it's a really bad bear market, it can stay a bad trade environment for a few years. Right. That's why I'm only starting to deploy some, thinking about deploying some swing trading cash for longer term. And then I'm going to continue to day trade until the market changes. Right. Okay, Microsoft. So Microsoft, your buy zone's right here down to 20. So this is the area you want to start buying. This is a key support. If we lose 200, your next level down is probably about 190, which is pre-COVID high, and then you're looking at around 170. So in this area right here is your next buy zone. It's a pretty wide one, because you can see on the volume show there's a lot of volume right around this area. So but this is a very key area. It's this 200 210 area. It's a very key area. So that's the area you really want to start a position right here. Okay. Netflix. So Netflix, you want to watch. I have my alert on already. Watch this area right here. If you actually hold this area, if once it goes into the gap, it's most likely going to fill the gap, and that's where you want to start making some money, right? Once it breaks above this area right here, it's tend to go into this, and this is a 100-point play. So that's quite a big play, especially with options. So they do have earnings coming up. So if their subscriber numbers go up, you can expect it to start gapping up as well. If it's bad, every single time they have bad subscriber numbers, look at the gap of size, right? So that's why you don't really want to risk it. If you want to risk it, risk a little bit of money with some lotto calls if you think that it's going to go up. But other than that, I wouldn't touch it. Nvidia, very same as AMD, right? It's at the buy zone right now. So this is the buy zone. It is look like it's going to break below the buy zone. So if you didn't buy yet, aim for like 100 to start your position instead of up here. I mean, you can if you wanted to right up here, but go small, like go like maybe a quarter position only right here, and then add around between 100 and 80, right? 80 would be most likely where the bottom is around that 80, maybe 60, but this is the buy zone right here. This is the big buy zone. This is the area where you want to start backing up the truck type of buy zone. These here is one to where you want to nibble at buy zone, right? So you can get a precision up here, but expect it to go down here. That's how I plan my trades all the time. All right, Tesla. So last week I talked about Tesla was in that consolidation range. Once that range is broken, expect the big down move. So it did break down, so expect the move to come down to right here. This is a very key area to hold. If it does not hold this area, right, it's coming down to here, 140. This is area, and then your next level is all the way down here. So yeah, that's a very, very far drop, right? So, and that can happen in a market like this, right? So, you want to be careful on that as well. But this is the first buy zone right here at 207, right? This needs to be hold. If this does not hold, it's just going to flush right down really quickly. So you want to be very, very careful if that breaks. And you want to be fully hedged. If you have any Tesla shares whatsoever, you want to hedge it, right? Because that's a big drop right there. Let's measure that. If it goes from there to here, that's a 30% drop. If it goes down to 60, Jesus Christ. I'll be buying that 60 for sure. But most likely, if it does come down, this is the bottom right here, 140. So yeah, you can nibble at it right here. But if it breaks down, you want to get out really quickly, and then aim for this area at 140. All right. So that's the update for this week. I'll see you guys next week. And if you guys looking to profit off this market, we are day trading. I do have day trading course. So, but our live session's already over. I do them maybe once or twice a year. So, but it's recorded, so you have access to the recordings, and you also have access to our live Discord for any questions and watch us trade at the same time. Yeah, so if you guys want to join me, just check out on my links below for our day trading course. All right, see you guys later.